From FXEmpire, this is Chris taking a look at the S&P 500. The S&P 500 has done almost nothing in the early hours of Monday as we continue to see a lot of overextension in the stock markets around the world. That being said, I think this is a scenario where traders will be looking at any pullback as a potential buying opportunity. And therefore, I think you're looking at the most obvious level underneath, which of course would be the 5,000 level. 5,000, of course, is a large round number, and it does make a lot of sense that we would see traders try to defend that. There's probably quite a bit of option action there as well, so pay attention to that. Any breakdown below that level could open up a move all the way down to the $4,850 level. This also is where we start to see the 50-day EMA coming into the picture closer to the 4,800 level. This is a market that has been straight up in the air for the last several months. And therefore, I think we have a situation where value hunting will be the only way to play this market. Keep in mind, the S&P 500 is driven by just a handful of stocks. It's not an equal weighted index, so there's no need to trade it as such. In this environment, I like the idea of taking advantage of value. Now that we have closed well above the 5,000 level, I think the shock of that goes away. But it's still just a bit too overdone to simply be reckless jumping into this market with huge positions. You have to look at every negative move as a potential buying opportunity, at least until the interest rate situation changes completely, or the Fed starts to panic cut interest rates, which I don't think they're anywhere near that. But if and when that happens, that's the death knell for the S&P 500. In the meantime, you're just buying every dip.